Hello. So today we are going to discuss about a technical analysis strategy which is known as Ichimoku. So firstly let's discuss what is the use of this strategy. So technical analysis basically is an technique to analyze these stocks in which you can invest by buying or selling the stocks. So what is the Ichimoku strategy particularly about? So for example, if a particular investor or trader using a particular platform, so there are very high limitations of that they can use the two or three indicators at a time, which are the technical indicators. So what Ichimoku strategy does is it is a single indicator which includes the volume and moving averages, and the combination of that forms a strategy, and it gives you the pattern and analysis basically to whether to invest in that stock or whether it is a good stock or not. So what Ichimoku particularly is, the Ichimoku is a collection of the technical indicators that show the support and resistance levels, obviously, as well as the momentum and the trend direction, which all the technical indicators do. It does this by taking the multiple averages and plotting them on a chart. I will show you the example in the next slide. It also uses these figures to compute the cloud that attempts to forecast where the price may find the support resistance, which technical analysis functions is. So what it includes is there are the 5 lines. The line includes the 9 period average and 26 period average, an average of those two averages, a 52 period average, and a lagging closing price line. And the conversion line I'll show in the next slide, that the conversion line, the green color line is the conversion line, red color is the baseline, blue is the leading span A, yellow is the leading span B, and magenta is the leading lagging span line. So we are using this strategy so that the trader or investor can save on the cost. For example, there are very few websites and there are very few platforms where a particular trader can put on these indicators and analyze, and if he can put on it for free, it would be around 2 to 3 indicators at max. So if a particular investor has to analyze that, he has to use the volumes, he has to use the technical indicator. So what function he can use? So he can use the Ichimoku strategy, wherein he only have to put the one indicator, so that there are no limitation and he don't have to pay the prices, exorbitant prices charged by these platforms for using multiple indicators at the same time. It is also useful so that it shows the short term and the long term moving averages and the crossover of that, which is also called the golden crossover, highlighting the fact that the stock is a good stock or not. So here are the two examples of the Ichimoku strategy previously discussed. So the first is the Mahindra and Mahindra, and second is the Godrej, which are the exact opposite, so that you can understand what strategy is about. So if you can see in Mahindra and Mahindra, the green line has taken a crossover and the red line is below the green line. And also if you can see, the candlesticks are working as, and the green line is working as a support for these all the candlesticks, which is a very good indicator and which is a very good strategy to use upon by any technical investor if he uses the technical indicator, because the green line has taken a golden crossover and it is a 21-day moving average. So it shows that the volumes and the moving average part has taken a crossover. Secondly, if you can see the magenta line, that is 21 days below the candlestick chart, it is also above the candlesticks, which is also a positive indicator. If the magenta line is below the candlesticks, then it would be a bearish sign for the trader to invest in. And if you can see the blue line in the future, that is the leading indicator, the blue line has taken a crossover of the yellow line, which is also a positive thing. If the blue line has taken a crossover, it will form a blue cloud, which is a bullish strategy. And if you can see there, if there are red clouds forming, then it is a bearish form, and the stock has generally fallen down after the red cloud has been formed. Now secondly, if we're talking about the Godrej products, in the Godrej consumer, if you can see, the leading indicators are forming a red cloud, which is a bearish cloud and which may show a sign that the stock will move down from here. Also the green line has just taken a crossover. It may reverse, it may not, it will be known in the future only. But if it has taken a crossover, it is generally a positive sign for the stock, but it is just a way ahead of the red line, so we have, like, the investor has to wait for some time in this kind of situation. Also the magenta line, if you can see, it is just below the and on the candlestick lines. So Godrej consumer product currently is a stock which a consumer or which a trader can consider in his portfolio. But Mahindra & Mahindra is a very good stock according to the chart, and if a particular investor follows a chart, so that he can consider the Mahindra & Mahindra stock for now. So I think this is up to it. It is a good strategy. Every investor trader at least should know about this. if they are following the moving averages, and if they are following the volumes, and if they don't have so many indicators to apply upon, so they can work upon this. Because every website or every platform would only provide a one, two, or maybe maximum three indicators to use at a time for free. Then they'll charge a price for that. So if you want to cut upon the cost, and if you are a small trader maybe, so you can consider these strategies which combine the 3 to 4 indicators together. And it also saves the cost, it also saves the time that an investor has to only use the one indicator, and it will showcase the everything that an investor wants from the analysis. Thank you.